Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to focus on the Nasdaq 100 today. So we'll take a look at the NDX, the Qs, and then take a look at a couple of our indicators. But let's start off here with the side-by-side view of the Dow Industrials, the S&P 500, and the Nasdaq 100. The Dow was down 771 points this week, 2 out of the last 3 weeks, and closing below the 10-week moving average for the first time in since when? What was that? That was the week of July 2nd. The S&P 500 down 94 points and down 3 weeks in a row, and it also is closing below the 10-week moving average for the first time since all the way back over here, the week of March 19th. The Nasdaq 100 down 3 weeks in a row, down 333 points, and it too is closing below the 10-week moving average. Let me see, did it do it last week? I'm trying to, 15,028. No, it was 2 points above the 10-week moving average. So this is the first close below the 10-week since the week of March 5th. So we'll see what kind of follow through we get. We're going to drill down and take a look at this. Let's go back over to the home page. So we talked about, here's the weekly picture, here's the daily picture, down 20.97. It tried to claw back on Friday, 20.97 on Friday. Tried to claw back after gapping down like all the major indices did at the open yesterday. And then we came back, but it couldn't get back into positive territory by the end of the day. So down about 21 points. You know, we're sitting here, was the 4th day in a row below the 55-day moving average. I like to focus on Fibonacci numbers, so that's why I use the 55 and the 21 over here. I've got the 10 as my trigger line, exponential. These two are simple. So that is the picture we've got. It looks like we're rolling over. Let's take a look at the Elliott Wave picture. Here's the bigger picture. Let me look at the weekly. We've had a very deep retracement in here that we've talked about many times, but right now we're watching for this to come down and break through some of the key support areas. You can see the divergence that's showing up on the weekly chart. Let's take a look at the daily, and let me just kind of make that chart a little bit better. So we closed, we broke below this support level here, what I've got labeled as minuet level 4, within the C wave of this ABC of the X wave of the bigger double zigzag. Okay, so this low right here, June 26, we broke below it. I think we closed right on it almost. Let's take a look and drill down into the 130-minute time frame. You know, before I do that, I want to just show you, let me go back to this, and I'm going to show you the Qs at the same time, because it's the same picture. It's the same picture, but of course, this is what everybody trades. So similar kind of thing. We broke down below it, but didn't close below it. Okay. So let's just, what I'm going to do is I'm going to drill down and take a look at the daily here on the Qs so we can see exactly where we are in terms of what I'm looking at. Now, the interesting thing here, coming off this high that occurred on July 19th, it looks like we have 1, 2. But also, because of the overlap that we've been getting, it looks like we have a series of 1, 2s. So within this third minuet level wave down, it looks to me like we have 1, 2, and we're still trying to flesh out 5 waves here. Okay, within this third, do I call it the micro? Now this is the sub-minuet and this is the micro. So minuet, sub-minuet, micro. And man, I tell you, it gets challenging when you start getting down into this very small subwaves in here, but this is my best take because we're getting this overlap. So I'm looking at this as 1, 2, and within this third wave, we have 1, 2, and notice how we're starting to get a little more straight line, free fall type action that's typical of a third wave. This looks to me like we are 1, 2, 3, chopping maybe sideways for 4, and then one more to finish off this wave. Okay, and then we'll need to finish off 5 waves down. So it's you continuously have a series of 5 waves. This is my best take right now. You notice that, let me go back in here. We're on the 130-minute time frame, so that's 3 bars to the day. So here's 6 bars as a part of this corrective move here. That was kind of a sharp pullback. So as of right now, we've got basically 2 coming off the low. Wouldn't surprise me at all to see us chop around Monday, Tuesday a little bit, going sideways. Notice how the bears tried to take control again in the last third of the day. You know, we got up, we pushed, and then we pulled it back. You know, you can tell by the way that bar is on the candlestick. That's what I love about these candlesticks. You can really, you know, it tells a story. Okay, so right now, I just think we're have the potential to chop around for maybe a day, day and a half or so, and then break lower again and finish off the 5-day sequence. Then we'll get another 4th wave move in here for a couple of days. So that is the picture. I know there's one thing I wanted to show you. We'll get to that in a minute. First, I want to look at some indicators. Let me go back to the daily here. The weekly and daily view that we've got. And let's take a look at a couple of the indicators. I want to pull up the put to call ratio. Okay, this is the equity only put to call ratio. And you can see we had a pretty extreme low in here on July 20th. We were getting a lot of extreme sentiment. This is my own personal color coding that I do. Here's the daily readings. Here's the 10-day average of the daily readings. And now we've kind of moved away from this extreme bullish activity that we're getting in June into July. And now the 10 days are slowly getting up here in terms of the increased put to call volume. So the way you read this is this says 85 puts for every 100 calls. And the 10-day reading is now at 0.77. Not at any kind of extreme, okay, at this point, but we are keeping an eye on it right now. So that's what's going on with the equity put to call. Now, I want to show you what's happening over here on the S&P 500 in terms of the percent of stocks above their 50-day moving average. We're sitting at 33.8%, so pretty dramatic. Here we got the turn. Come down here, where was the high? July 24th. Kind of interesting. We got right up near this extreme of 90%, which back in December, we were above for 3 days. In August, we were above for 5 days, okay? And now we're heading south. Now, in March, we bounced around the 20% level for an intermediate low, but if you look back over here and take a look at September, October, you can see it got below 10%, and August, well, actually that's June, got below 10%. So the June low, the September, October low, and then here we are coming down hard in terms of the percent of stocks in the S&P 500 above their 50-day moving average. Okay, let's go back. I want to take a look at the Super 8. And here's the thing. I know I've talked about this before. There's only 3 of the 8. We've got 8 on here, and this is the S&P 500. Only 3 of the 8 that have broken above their prior all-time high. Tried to stay there, but only one of the 8 has. Okay, so Apple broke above, has not been able to hold above its all-time high. Microsoft broke above, has not been able to hold above the all-time high. The only one is NVIDIA. And NVIDIA's got earnings on Wednesday, I believe, after the market closed. Going to be really, really interesting because all of this big move in here was occurring when they talked about all the artificial intelligence revenue that they were going to get. So we'll see what happens and how, if their outlook has even changed at all. Okay, so that's what's going on. That'll be coming up this week. And of course, we got Chairman Powell, I believe, giving a presentation or keynote speech on Friday. So that out at Jackson Hole in Wyoming for their annual little Fed conference that they do with all the central bankers getting together. Okay, so that is what's going on here. Let's, with the Super 8, as I call them, we go back to the home screen. What I want to do is pull up and take a look at Apple, Microsoft, and Amazon. And why? Because these three are the biggest percentage contributors to the QQQs, the Nasdaq 100. Let me pull this over. Okay, so I talked about the fact that Apple had broken above its all-time high, hasn't been able to hold there, and look at how strong down the last 3 weeks this has been. And basically, that's exactly what the Nasdaq 100 has done. Now, we're getting a little bit of divergence showing up over here on the daily on the RSI. We'll see if this is going to turn or not. A couple of things that are fairly dramatic, and I realize I forgot to mention something about the Qs, but notice over here on Apple, and let me blow this up a little bit. This doesn't always happen, but sometimes it does, and it's kind of interesting. When you look at the directional indicators on DI plus, DI minus, the red's minus, the green is plus. When it breaks below this black line is the ADX line, the average directional indicator. When you break down below it from a high reading level, many times that's telling you that the buying power has run out of steam, okay? Well, it did it again over here and told you the selling power had run out of steam back at this level. Kind of interesting that we're seeing that here on Apple. So let's take a look at, and Apple contributes, I'm looking at my notes, 11.6% of the Qs, okay, the QQQs. Microsoft, 9.4% of the Qs, okay. So here's the picture of Microsoft, the weekly, tried to close above it, tried to move above it, couldn't hold up here at all. Is now been down for 5 weeks in a row. That was actually a down week, big move up and closed down. And so 5 weeks in a row in here. Now, not as dramatic on the, let me get rid of this for a moment. Not as dramatic on this picture as what I just showed you, but a similar kind of thing. I like to see it when it's even higher, but it still implied that it was running out of steam. Okay, running out of momentum. Okay, so now looks like we've flipped over. We're heading south. Granted, we've had a pretty strong move. Wouldn't be surprised to see some, snapbacks occurring, pulling back up into the middle of the Keltner channel. The Keltner channel that I have on the charts here is the dash lines, and then this is the center of the Keltner channels. I like the Keltner channels better than the Bollinger Bands. It's just my own personal preference. I like the way they move. And then, of course, you've got, the 10 exponential 10 hard down, the 21 hard down, and they flipped down below the 55. So it looks like we've rolled over and heading south on Microsoft also. Now, Amazon. Let's take a look at Amazon. Different animal. Amazon on a weekly basis has never even gotten close to that all-time high that occurred back in 21. And of course, that didn't happen in November. It actually happened back over here in June, July of 21. So we haven't even gotten close. Little bit different picture. We haven't broken down below the 10-week moving average in here. But when you look at the daily view, it kind of looks like we're starting to do that. This big pop that occurred here on August 4th with, I think that was earnings on Amazon. I don't remember exactly, but I think it was when here, maybe earnings were released on the 3rd after the market. It hasn't been able to hold it. You notice that the high that day has been hit so far, and now we've rolled over and 3 days in a row back down below the 10-day moving average. So we'll see what kind of follow through we get in here. Let me get rid of this for now. Let me move this up and take a look at this. And, Amazon is 5.2% of the Nasdaq 100, the Qs, the ETF. The three of them together, 26.2% between the three of these. So this is going to be interesting to see how much longer is it going to take for this start to roll over and break down in here, similar to what's going on with Apple and Microsoft. All right, that is the picture for today. We're keeping an eye on this on Amazon for this weekend anyway. So if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.